Alright traders, check this out. We got the dollar versus the Canadian. You probably remember this very well because we were here a few days ago. In fact, it was just before the last weekend, right? Just before the weekend kicked in. I was here announcing this really interesting trading opportunity. It's actually a pending trading opportunity because we were still out, right? We were still looking at this from the side. And we were waiting for a very particular key level to get triggered, right? I had this official trigger that I presented to you, right? It was the 31.92, and in fact, price was right here on the very edge. And what I said was that I believe price is not going to continue moving downwards beyond this point. We think it's going to come back up, but we're not willing to pull the trigger yet. We want to make sure that's going to be the case, and we're gonna use 31.92 as the trigger, right? If price will be able to break back up, no matter how far it's going to go, no matter how deep the breakout's going to be, we're going to jump in, right? We're going to get involved here with a bullish position. Obviously, we were hoping that price will not go too deep. In fact, it did break out pretty deep, right? It went pretty far. But it still left us enough room to have a successful position, right? A meaningful position. Now, as you can see, right, it's the same day that it did that was last Friday, right? We pulled the trigger right after that day, which was Monday morning. The first thing in the morning, we pulled the trigger on the dollar Canadian. Ever since then, we had a couple of days of a bit of a downside correction, which is expected, right? It's very expected. And what we don't think it's going to be sustainable. We think it's just a bit of a local downside correction. Price will resume the original move. Well, in this case, an upside move. We think price had a downside correction with this move, right? We think that the trend is up. I mean, we're talking about the short-term cycle, right? And it's up ever since the end of October, roughly, right? The end of October, that was the tipping point. Ever since then, we're on the upside. And what we had here last week was a technical correction. We should be back on the upside, actually conquering new highs. In fact, we think price has a lot of potential to take the previous high, right? We're talking about the previous major high. Right here, 133.80. 133.80, guys, that's our primary target. That's our final destination. We do have a secondary target, 33.24. You're probably, if that's that key level sounds familiar, that's because we were already using that level before to take profit in the previous bullish campaign. That was our primary target. This time, we think it's going to surpass that point and we'll take the previous high, which is why we're going to address 33.80 as our primary target. All right. We have our stop loss level in its original placement. 31.40 should be far enough to keep us safe here. Obviously, we're playing 31.92 for protection, right? We don't expect price to manage crossing back below that level. Even if that downside correction is going to stretch itself out, we don't think it's going to, surpass that point. 31.92 should be the last line of resort here. So yeah, should be interesting to follow up and see how things are going to unfold here. We'll be sure to do that. All right, so that's about that for today, guys. Forex Market Analytics. Have a nice day. We'll be back tomorrow.